Hello everyone, welcome to today's lecture. So today we are going to cover the Essay 300 series. In last lecture we covered the Essay 200 series, and one or two essay from 200 series were left. So I will be covering in the first half an hour, 1 hour of today's lecture, and then we'll shift to the Essay 300 series. Now before I proceed, I'll again reiterate how we are going this time. We are not covering the whole essay. We are not going the theory portion of the essay. Rather, we are solving the practical questions, MCQs, case studies of those essays, so that you guys can get understanding how to answer the question in exam. Okay. Our focus this time is on the practical side and applications of the essay, and other topics like in start we covered for the peer review and quality review. So what we expect is that please see the lectures, recorded lectures, which are available on the website and on the portal. Before you start this lecture, before you come to the lecture, please watch those lectures, because that is very necessary, and participate as much as it's possible, because the more you will try to participate, the more you will engage yourself into the questions, into the discussions. Okay, the more you will get the clarity about the topic. It's very important, very important that you should see the past videos, lectures, and you study and read the study material. Okay, then only we will be in a position to carry this question answer session or this practical session forward with you guys, and it will be better for you also to get an understanding of what we are discussing, which topic we are discussing. So before I proceed, any doubt from the previous lectures or any doubt you guys want to ask, who have watched the video lectures or who have gone through the study material? Any doubts you guys have? You can post it in the chat box. You can post it through the chat box. As and when you have a doubt, you can post it through it. I will be taking the doubt when I receive it, and I'll try to solve as soon as possible. Okay. If no further doubts, then I'll suggest let's start. So in last lecture, we discussed till essay 250. Now we are left with 260, 265, and 299. I'll quickly cover those essays also today, and then we'll move to essay 315. Okay. So we discussed one, just in revision, we discussed in last lecture about essay 250 and 240. 240 was, with related to auditor's responsibility, with related to fraud in a financial statement, where auditor is required to assess the risk of material misstatement with respect to fraud in a financial statement. There were two areas, that revenue recognition and management override of control with respect to, for fraud risk. Then how to respond the assessed risk of fraud. So basically it was an application of essay 315 and 330 with respect to, fraud risk factor. Then we talked about essay 250, that was considering laws and regulations. Okay. There were two types of laws and regulations. One was with respect to direct laws and regulations, which have an impact on the financial reporting of the entity. Another type of laws and regulations were other laws and regulations which were not having direct impact, but they were fundamental to the operating of the entity. Okay, so these two type of laws and regulations were there. So auditor is required to look into laws and regulations, understand how they impact the entity. Auditor is required to gather sufficient and appropriate audit evidence with respect to the compliance to those laws and regulations. Identification and prevention and detection of non-compliance is the responsibility of the manager. Auditor needs to gather sufficient and appropriate audit evidence with respect to understand, to understand whether the entity has complied with the laws and regulations or not. So we discussed one of the question. This was the question that we discussed in the last lecture. That was very good question because it was covering 4 essays together: essay 250, 705, 260, 570. All together, all essays together were covered in one question itself. Okay. So that was something, some background on the last lecture. Now let's go forward with essay 260. Okay. Now before I jump on to essay 260 questions, I'll just give you a brief about essay 260. Essay 260 basically talks about communicating with those charged with governance. Okay. So essay 260 talks about what are the matters and what are the instances that are required to be communicated to those charged with governance. Okay. And those matters which are required to be communicated are enumerated in that particular standard, or the situations which are under which a communication is required is enumerated in these standards. Okay. Now, when you see essay 260, essay 260 plays a very important role. Although there will be relevant essays which lays down communication requirement, this essay talks about the form of the communication, the mode of the communication, and other areas which are not covered by the essay. So in that sense, essay 260 becomes one of the important essay because it talks about communicating to those charged with governance. Okay. Now, the objective of this particular essay, for the objective of the auditor under this essay, to communicate clearly to those charged with governance. Okay. To communicate clearly with those charged with governance is the responsibility of the auditor and the overview of plan scope and timing of audit. If you see, it talks about communicating what is the responsibility of the auditor under this essay. This essay requires to communicate to those charged with governance. Also, on the same time, this essay provides an objective to the auditor to obtain information. On one side, we are giving the information, we are communicating the information. On another side, this essay talks about obtaining information those charged with governance relevant to the audit. So, whatever information is relevant to the audit, this essay requires us to obtain it from those charged with governance. And wherever we require representations, this essay requires us to gather that evidence too. I'll quickly show you. Okay. So, scope of this particular essay: auditor's responsibility. Auditor's responsibility to communicate with those charged with governance and audit of financial statement. Now, as I said, objective is to communicate clearly with those charged with governance, the responsibility of auditor, and overview of plan scope and of audit. To obtain, and that's another objective, to obtain from those charged with governance information relevant to the audit. To provide those charged with governance with timely observations that are significant, relevant to their responsibility to oversee the financial reporting process. Then to promote two effective way communication between auditor and those charged with governance. So when I say communication, it's not one side, it's both sides. Matters that are required to be communicated to those charged with governance under this essay. So auditor is responsible to express the opinion on financial statement. That it's his responsibility to express an opinion on the financial statement prepared by the management. That's also important, that it should be prepared by the management. Plan scope and timing of audit. Auditors view about significant qualitative aspects of the entity's accounting policy, significant difficulties encountered during the audit, circumstances that affect the form and content of audit report, any other significant matter arising during the audit relevant to the oversight of the financial reporting process. 1, 2, 3, and 4. These 4 are very important. Auditors view about significant qualitative aspects of the entity's accounting policy. If there is any area that you feel that the accounting policy is not appropriate or it's not appropriately applied, that will fall under this category. Significant difficulties encountered during the audit. You are not getting data. It's very, the details are not available, or, cooperation issues. A lot of things are there. That will fall under second. Circumstances that affect the form and content of the audit report. Any modification, qualification, adverse opinion, or disclaimer opinion. Any observation which is impacting that, or any matter which either requires you to put going concern issue, or anything which forces you to change the form and content of audit report. That is something you are required to communicate. And any other significant matter. Second, the thing which is required to communicate is regarding auditor's independence. So this essay requires us to communicate a statement that engagement team and others in the firm have complied with the relevant ethical requirements regarding independence. The related safeguards that have been applied to eliminate an identified threat to independence or reduce them at an acceptable level. Plus, if any safeguards have been applied, so those safeguards also. So, what are the things that are required to be taken care while communication? That communication should be in writing. It should be on timely manner. Okay. The auditor should evaluate the adequacy of the communication process with those charged with governance. Okay. And the auditor is required to document the communications. Okay. So these are certain areas which are there with respect to the communication. NSA 260. Any doubt? Any doubt? Okay, there is one doubt that why during the audit. So it gives an a background to them, quite a background to them, that okay, what is the matter, how it is working, how the audit is progressing and everything, so that they can also provide us the required information, or they can assist us also wherever it is required. That's why it's necessary to communicate. So there's another question. What do we mean by component auditor? Component auditor means auditor of subsidiary company. Okay. So when I say parent auditor, it's a auditor of parent company. And when I say component auditor, component of a subsidiary company. Sort of. Any doubt? Okay. If no further doubts, then let me take you through the questions. Okay, let us see some questions. Mr. Manjunath, an audit manager, while performing the audit of New Industries Limited, came across few accounting estimates which require revision on account of change in circumstance. Mr. Manjunath concluded that this is required to be disclosed to those charged with governance at the auditor's view about the significant qualitative aspects of the entity accounting practice, including accounting policies, accounting estimates, and financial statement disclosure. So, Manjunath is considering to disclose the matter, okay, to those charged with governance, to communicate the matter to those charged with governance, okay, as this was significant qualitative aspects of the entity's accounting practice. And what was the matter? The matter was with respect to few accounting estimates which require revision. Okay. Now, before Mr. Manjunath could communicate, okay, management informed Mr. Manjunath that they have already communicated the same to those charged with governance, and to avoid duplication, the auditors are now not required to communicate again. So, to avoid the duplication, they are not required to communicate again. And Manjunath had already management has already communicated. Okay, Manjunath agreed to this, and he skipped the point from the letter of communication. Now, you need to guide Mr. Manjunath with correct course of action in this scenario under XA 260. So what should be the correct course of action here? When anything is already disclosed by the management, what is then responsibility of an auditor with respect to the disclosure or communication? So you need to answer that what is auditor's responsibility when management is already communicating with those charged with governance. Come on, guys. What is the responsibility of the auditor when management is already communicating with those charged with governance? Won't it be duplication of communication? Okay, good, Jadvi. Won't it be duplication of communication? Quickly. Won't it be duplication of communication? Absolutely correct, Shrita. Okay, good, good, Namrata. Okay, see, so SA 260 says, irrespective of what management is communicating, we have to communicate. So nowhere we saw any requirement which talks about that, okay, we should not be communicating if the management is communicating. Okay. So SA 260 talks about SA 260, those charged with governance, communication with those charged with governance. Auditors shall communicate with those charged with governance. Auditors' view on the significant qualitative aspects of the entity's accounting policy or accounting practice. Okay. Second, significant difficulties, if any, encountered during the audit. Unless all of those charged with governance are involved in managing the entity, significant matters arising during the audit, written representations, auditor is requesting, circumstances that affect the form and content of audit report, or any other significant matter arising during the audit. Okay. So these are the areas which are required to be communicated. Now, communication by management with those charged with governance of matters that the auditor is required to communicate does not relieve the auditor the responsibility to communicate with them. Does not relieve the responsibility of the auditors to communicate with them. So, auditor is still required to communicate. Auditor is still required to communicate with those charged with governance. Communication of these matters by management may, however, affect the form and timing of auditors' communication with those charged with governance. How can you say that communication of these matters by management may affect the form and timing of auditors' communication? Can anyone give me an example? Okay, how communication by management will affect the form and timing of auditors' communication with those charged with governance? How this will happen? How the communication by management will affect the form and timing of auditors' communication with those charged with governance? This is a practical scenario I'll tell you I have encountered multiple times. Come on, guys. How the communication of these matters with those charged with governance may impact or affect the form and timing of auditors' communication with those charged with governance. I'll tell you simply. So whenever there is a communication by the management states some facts, their responsibilities, and what they have done. Okay. So at times we are identified where the management was grossly negligent. They presented a different fact in their communication to those charged with governance. Hence, accordingly, our communication form and timing, the matters that we communicated, we had to change those form and timing. We had to communicate immediately, and when there is a fraud case in which the management is involved, management might present their different view when they are involved in fraud, okay, to the those charged with governance. In that case, our form and timing of the communication varies because whatever management has written might not be correct or not the real picture of the evaluation of fraud. Hence, in that case, the communication by the of these matters by management affects the form and timing of auditors' communication with those charged with governance. So, in the current case that we are discussing, okay, the audit manager came across few accounting estimates which required revision. Management informed that they have already communicated same to those charged with governance, and to avoid duplication, the auditor are not required to communicate again. The audit manager agreed to the opinion of the management and skipped the point. Hence, as a result, the audit manager should communicate to those charged with governance, as communicating by management does not relieve the audit manager from communicating to them. Okay, so auditor should come. Okay, let us see one more question. While explaining the critical areas or situations that require communication to those charged with governance, audit manager explained that unless all of those charged with governance are not involved in managing the entity, the auditor shall communicate with those charged with governance the significant matters arising during the audit that were discussed or subject to the correspondence with the management and written representations the auditor is requesting. Okay. So, unless all those charged with governance are not involved in managing the entity, the auditor shall not communicate. The auditor shall communicate those the matters with those charged with governance. Okay. Then Mr. Akash, one of the audit team member, was having further doubts about the situation which require communication to those charged with governance, and hence he has reached out to understand it further. Kindly guide Mr. Akash by selecting the appropriate option from below. So, what are the options? Let us see. Unless all those charged with governance are not involved in managing the entity, the auditor shall communicate with those charged with governance the significant matters arising during the audit that were discussed or subject to the correspondence with management and written representation the auditor is required to. Unless all those charged with governance are involved in the managing the entity, the auditor shall communicate with those charged with governance the significant matters arising during the audit that were discussed or subject to the correspondence with management and written representation the auditor is requesting. Irrespective of the involvement of those charged with governance, the auditor shall communicate with those charged with governance the significant matters arising during the audit that were discussed or subject to the correspondence with the management. However, he should not communicate the written representations he is requesting. Auditors should not communicate with those charged with governance the significant matters arising during the audit that were discussed. Absolutely correct, Shriyam. So communication by management, it's correct. Come on, guys. Which is the correct option here? I'm waiting for the answer. So you need to guide in what circumstances or situation. So what is the question? Question is, you need to guide Mr. Akash by selecting the appropriate option from below with respect to the situation which require communication with communication to those charged with governance. So which are the situation or critical areas that require communication to those charged with governance? You need to select one option from that. The correct option. So you need to only just focus what are the critical areas and when you are required to communicate with those charged with governance. Okay. Good Janvi. Good Namrata. Good Shri Ram. I'm expecting more answers. Come on, guys. Very important question. You need to discuss which are the matters or you can say situations under which we can communicate with those charged with governance and which or what is the correct option from this one. Okay, so let us see the answer now. See, I'll explain the concept first here. We are required to communicate to those charged with governance. Okay, that is there. Now, what if all those charged with governance are involved in managing the entity? Means there is no distinction between those charged with governance and management. When there is no distinction between or bifurcation between management and those charged with governance, means the entity is small, they don't have a separate audit committee or oversighting board or governance, something board. The management itself is, oversighting the financial reporting process and everything. So management and those charged with governance are same. In that case, are we required to communicate again the matters that are required to be communicated to those charged with governance? Because we are already dealing with management. Management and those charged with governance are same. If we are already discussing the matters with management, we have already, discussed the matter with management. If you see over here in the question also, that auditor shall communicate with those charged with governance significant matters arising during the audit that were discussed or subject to correspondence with management. Okay. So, which are discussed and which are subject to correspondence with management means we already discussed with the management. If management and those charged with governance are same, then why we should, again communicate the same thing to the same person? There is no point in that. That's why, unless all those charged with governance are involved in the managing the entity, okay, the auditor shall communicate it. Unless they are all are involved, okay, the auditor shall communicate. Okay, this is the one. It's saying this B1 is saying that unless it is all they are involved, the auditor shall communicate. So that means we need to communicate when all they are involved, but that is not the correct one. Okay, that is not the correct one. So in that case, what we need to do is when those charged with governance are not, okay, management, or they are different, then only we are required to communicate. If you see the point number 2, unless all of those charged with governance are not involved in managing the entity, the auditor shall communicate. Okay, so unless all those charged with governance are not involved, that is the more appropriate. Okay, so if they are not involved in managing the entity, then the auditor shall communicate. Means both are different. Both are different. Clear? So hence A will be the answer, not B, C, or D. Irrespective of the involvement, no. The involvement decides that when you want to communicate. I hope I'm clear. Any doubt with respect to this? Okay. Now, another good question. That is, the auditor shall communicate with those charged with governance an overview of the plan, scope, and timing of the audit, which includes communicating about the significant risk identified by the auditor. Kindly guide with the examples of the matters that may be included in the communication. So you need to provide some examples of the matters that may be included in the communication to those charged with governance. So you need to provide some examples of the matters that can be included, okay, in communication with respect to plan scope, significant risk, for the communication with those charged with governance. Like which are the matters you can include in the communication with those charged with governance with respect to the plan scope or risk identified. Come on, guys. Some examples. Some examples that could be included in the communication with those charged with governance with respect to the plan scope and timing of audit that you think you can include. Okay, good, Sriram. See what, consider yourself into the same situation, put yourself in the shoes of the auditor and think, okay, if you are on the place of that auditor, you want to communicate the board or those charged with governance audit committee with respect to the plan scope, timing of the audit, significant risk identification by the audit, what you will communicate. Absolutely correct, Srinam. Come on, guys. Or any other matter. Like we saw some matters other than that, what you could cover in your communication. We saw few matters earlier that were listed. Other than that, what you could include in your communication with those charged with governance. If I say you to communicate, what are the matters or examples you will cover? Correct, Sriram. I'm getting only one answer. I expect answers from more students because that will really help you to enhance your understanding of the topic. It's not just the essay that is there and we have to read and we have to answer it. It's about understanding the essay, understanding the requirement. Okay, how to practically apply, and this is a practical application because it's not like that. Okay, there are 4 points which are covered under the essay, and you will write the same line when you will communicate to those charged with governance or audit committee, governance board. When you will go into the practical life and you will try to communicate with them, there will be a list of topics that you can communicate and you should communicate. Correct, correct, Janvi, correct, Namrata, correct, Sriram. Okay, let me tell you the answer. So, communicating significant risk identified by the auditor has no charge with governance. Understand those matters and why they require a special audit consideration. Okay. The communication about significant risk may assist those charged with governance in fulfilling their responsibility to oversee the financial reporting process. Now, the matters that can be included is how auditor plans to address the significant risk of material misstatement, whether due to fraud and error. So, means how you will apply SA 330 in response to assessed risk of material misstatement. Then how the auditor is planned to address the areas of higher assessed risk of material misstatement. Again, same. Auditor's approach to the internal control relevant to the audit. This is something related to we decide when we apply SA 315. Application of the concept of materiality in the context of an audit. Again, it's an application of the materiality, that how you are going to decide the materiality, what are your benchmarks, what will be your performance materiality, and I could say that it's SA 320. Nature, extent of the specialized skill or knowledge needed to perform the planned audit procedures or evaluate the audit results, including use of an auditor's expert. So, understanding the need for an auditor's expert and using the work of an auditor's expert. That is essay, which talks about the using of the work of auditor's expert. Which essay it is? Using the work of an auditor's expert. When essay 701 applies, the auditor's preliminary views about the matters that that may be areas of significant auditor's attention in the audit report and therefore may be key audit matters. So, essay 701. If you see, most of your answers are from essay itself, because the whole audit is within the essay itself. Okay. So, whenever there is a communication required, it will be based on the other essays only, because the whole audit is within the essay and your answer will also come from that. Other planning matters that may be appropriate to discuss with those charged with governance. Okay, and that could be where the entity has an internal audit function, how the auditor and internal auditors can work together in a constructive and complementary manner, including any planned use of work of internal audit function and the nature and extent of any planned use of internal audit to provide direct assistance. That is essay 610, using the work of internal auditors. Then there are certain views of those charged with governance of like you will ask views of those charged with governance, because I told you there is a two-way communication. It's not only we will only provide them, but we will also ask them some questions. And what we'll ask them? We'll ask them the appropriate person in the entity's governance structure with whom we can communicate. We say point of contact, basically. Allocation of responsibilities between those charged with governance and management. Entities, objectives and strategies related and the related businesses that may be result in material misstatement. Matters those charged with governance consider warrant particular attention during the audit, like for them, which are the important matters they want to listen to. Significant communications with regulators that they are doing. Other matters with those charged with governance consider may influence the audit of financial statement. Okay. So these are certain areas that you want to understand their opinion. And you want to understand then the attitude, awareness, and actions of those charged with governance with respect to entities' internal control. Okay. Then the actions of those charged with governance in response to development in accounting standard, corporate governance practices, exchange listing rules, and etc. if they are applicable. Then responses of those charged with governance to previous communication with the auditor, if any pending. And documents comprising of the other information, the plan, manner, and timing issuance of such document, when the editor when the auditor should expect to obtain the other information, which is as per SA 720. So these could be some examples of the matter that can be communicated with those charged with governance. Okay, so there is one good question. The question is that, okay, we know the answer, but we are not able to use the exact wordings as essay is presented or within the essay it is presented. What should we do then? See, if you are not able to write the exact wordings, okay, which are presented within the essay, it's fine. Till the time your words, till the time your words are delivering the same meaning, grammatical here and there is, I don't think so, will matter more. So for example, I'll tell you, some might say, okay, I'm not able to write those charged with governance. Okay, I'm not able to write those charged with governance. And if I write an exam, audit committee, or if I write an exam, management, is it fine? Answer is no. That will change the meaning. So there is an essay on those charged with governance, and if I change the word with management, then it will destroy the meaning of the whole essay. So you need to understand when you are writing in your own words what you are changing. Am I changing the critical terms which define the meaning of an essay or define the meaning of that particular topic? Then it's a problem. But if you are changing few words and here and there, if you are changing few grammatical things here and there, it won't make much difference. Answer will remain same. Meaning that is derived from the answer and topic will remain same. Like for example, this is application of concept of materiality. Okay, you can write that how the auditor will apply the meaning of the topic or answer, and that is being seen at times. Any doubt? Any doubt with this? Any doubt, guys? Are you clear with this? Okay. Then there is another essay, next essay that I want to take care of. This is essay 265. Okay. Essay 265 on the same line deals with the communication. Okay. But it talks about communicating deficiencies in internal controls. Okay. With those charged with governance. So SA 265 talks about communicating deficiencies in internal control to those charged with governance and management both. Okay. Now, why there is a need for separate SA and what are the deficiencies that we are talking about? That's important to understand before we proceed to the questions. See, when I talk about significant deficiencies or deficiencies in internal control, what is it? What is the deficiency mean? Deficiencies in the internal control could mean, when the internal control is not stopping or is not mitigating or is not operating in the way that it should operate or prevent, detect the misstatement in the financial statement on a timely basis. There are two things. Let's say, for example, there is a control. For example, three-way match control. PO plus GRN plus invoice. Okay. Now, if this control is not able to prevent and detect, is not able to prevent and detect the misstatement or the issues basically or risk. Okay. Now, what could be the misstatement here? Misstatement means processing of wrong invoice. Okay, processing of wrong invoice. Wrong invoice means has a wrong quantity or price. Okay, so PO plus GRN plus invoice, that's a three-way match control. When it's not able to prevent processing of wrong invoice or not able to detect processing of wrong invoice on a timely basis. That's a very important thing. On a timely basis, it should not be the case. Okay, that invoice was processed today, but the control detected the issue 2 years later down the line. No, on a timely manner, it should detect. Okay. In that case, I can say if that is the case, that it is not able to prevent or detect, then there is a deficiency in the internal control. Deficiency in internal control. Okay. Now, when one or more deficiencies together, okay, are of such importance that it requires attention of those charged with governance, means you identified one definition in invoicing, one deficiency in the payments, one deficiency in vendor master, and all other deficiencies together are of such nature that it requires attention of those charged with governance, then in that case, that becomes significant deficiency. Okay, then it becomes significant deficiency. Now, what this essay requires? Essay requires that identify whether there are any deficiency in the internal control. Okay, essay requires auditors to identify whether there is any deficiency in internal control. Understand whether the individually or combination they constitute significant deficiencies and communicate to respective stakeholders if you identify. Okay. Now, as an auditor, we are required to communicate to the management or those charged with governance the deficiency in the internal control. Now, at instances, it will be inappropriate to communicate to management because it might be the case that management might be involved in such kind of transactions or fraud that, communicating management will make them alert that, okay, These are the things we have come across. In that case, we are not required to communicate because it will be inappropriate to do so. Okay. So we need to communicate with the management unless it is inappropriate to do so. Now, with respect to the form and content of the communication, a description of the deficiencies and an explanation of their potential effect that is required to be communicated. Okay. Then, if the auditor has communicated deficiencies in internal control other than the significant deficiencies to management in prior period, and management has chosen not to remedy them for cost or other reasons, the auditor is not required to repeat the communication in the current period. Means I highlighted this control in the previous period. Let's say I highlighted in control this control.
Sorry, I don't know that.
I highlighted this control in FY, let's say 21-22. However, management chose not to remediate this control because they told, okay, it will involve a lot of cost. I said, fine, your wish. In FY 22-23, again I came across this issue. I will not be communicating again. I'm not required to communicate again because I have already done. Management has said, okay, they will not rectify because of XYZ reason, and to again re-repeat the communication on this matter will be duplication, and hence I am not required to repeat the communication because that has been already done. Okay, then auditor is also not required to repeat the communication or information about such deficiencies if it has been previously communicated by to management by other parties such as internal auditors, regulators. Okay, so we are not required to communicate that matter also. For example, there are issues listed under the internal audit report. I can just copy paste in my report and give it to management. Okay, see, these are the observations. But what is the point in doing that? Hence, it is not worth to repeat the deficiencies which are already being communicated to the management. Clear? Any doubt? Now, respective stakeholders will include management, those charged with governance, okay, might include shareholder depending upon the case, depending upon the case to case basis. This is internal, regulators, financial institutions, other authorities. This is external. So, are we required to communicate to all these stakeholders? Answer is no. The thing is respective stakeholders which are applicable in that particular case. So, if it is applicable only to these two, I'll communicate only to these two. If it is applicable to all, then only I will communicate to all. Otherwise, I will not communicate. So, there might be scenario where it is applicable to the respective stakeholders. I need to identify which are the respective stakeholders. Any doubt? Okay. So there is one doubt with respect to the understanding of SA 260. Like, what is those charged with governance? Okay. So those charged with governance means persons or organization with responsibility for overseeing the strategic directions of the entity and obligations related to the accountability of the entity. This includes overseeing financial reporting process. So their responsibility is to oversee, again, with responsibility for overseeing the strategic direction. Okay, They are not required, they are not involved in the conduct of the entity's operation. So if the persons which are responsible for conducting the entity's operations, those are known as the management. Okay, those are part of management. Hence, those charged with governance will be the people who will be, with responsibility of overseeing the strategic directions. It may include audit committee. Okay, may include some, different committee. For example, you can say governance committee. At times, you will have a corporate governance committee. Okay, you have other committees, risk management committee, strategic committee, decision making, okay, planning committee, a lot of things are there. So those committees can, be called as those charged with governance. Any doubt? Any doubt? Okay. If no further doubt, then let us see one question. While auditing the controls over business process for Autotech FinTech Limited, Mr. Akash, an audit team member, identified that the control over increase of customer credit limit is not appropriately designed. He further identified that while increasing the customer credit limit, the sales or credit team were not consulted. Rather, the team responsible for maintenance of the customer master were increasing the credit limit based on average outstanding AR balance of the last 3 years. So, again, Mr. Akash, an audit team member, identified that the control over the increase of customer credit limit is not appropriately designed. Number one. Number two, further he identified that while increasing the customer credit limit, sales team and credit team were not consulted. Increase in the credit limit was based on average outstanding AR balance of last 3 years. Okay. Upon further testing, the audit team concluded that this was constitute a significant deficiency in the internal control. However, management has a different opinion. As per management, there was no misstatement or fraud due to design deficiency in the customer credit limit management control. Rather, there was a likelihood that the misstatement could occur. Hence, as per management, where there is a likelihood but not actual misstatement, then such deficiencies gives rise to likelihood of misstatement and cannot be termed as a significant deficiency. So, you tell me whether can I term this as a significant deficiency or not? If it is only a likelihood of a misstatement, I have not identified the actual misstatement, can I term this as a significant deficiency? Based on the likelihood, can I term this as a significant deficiency when I have not identified an actual misstatement? So, there was no fraud or misstatement due to design deficiencies. Rather, there was only likelihood that a misstatement could occur. Based on that, can I term this as a significant deficiency? So, auditor wanted to term this as a significant deficiency, but management had a different opinion. Come on, guys. Can I term this as a significant deficiency or not? Very important. Because we just now saw the definition, but still we this will enhance our understanding about the significant deficiency. This will really enhance our understanding about the significant deficiency. I'm waiting for the answer. Okay, good Janvi, good Namrata, good Tushar. Appropriately correct, Sriram. Good Namrata. Okay, let us see the options. Option number one. The significance of a deficiency or combination of deficiencies in internal control depends on whether a misstatement has actually occurred, but not on the likelihood that a misstatement could occur and potential magnitude of the misstatement. Significant deficiencies therefore will not exist when the auditor not identified misstatement during the audit. Second option. The significance of a deficiency or a combination of deficiency in internal control depends not only on whether a misstatement has actually occurred, but also on the likelihood that a misstatement could occur and the potential magnitude of the misstatement. The significant deficiency may therefore exist even though the auditor has not identified the misstatement during the audit. A deficiency in the internal control on its own may not be sufficiently important to constitute a significant deficiency. However, a combination of deficiencies affecting the different account balance, different disclosure, different assertions, or different components of internal control may increase the risk of misstatement, but not to the extent to give rise to significant deficiency. Law or regulation in some jurisdiction may establish a requirement to identify significant deficiency. In jurisdictions where such requirements are not present, the auditor should rely upon the management assessment of the deficiencies identified in the internal controls. What could be the correct option? A, B, C, D. I'm reducing the size so that you can see all the options together. Okay. Which is the correct option? Now you need to choose one option from these. Which option you will choose? Good Shri Ram. Come on, guys. Which option you will choose? Okay. Good, Namrata. Good, Nandula. Good, Tushar. Good, Janvi. Okay. See, now significant deficiencies. When I talk about significant deficiencies in internal control, okay. Uh, as I said, significant deficiency is a combination of deficiencies identified. And what a deficiency mean? Okay. What a deficiency mean? Deficiency is something that a control is not able to prevent or detect or correct misstatements. Deficiency is something a control is designed, implemented, or operated in such a way that it is unable to prevent, detect, or correct misstatement in the financial statement on a timely basis. Okay. Now, when I talk about prevent, the control is designed in such a way that it is unable to prevent. Okay. Designed in a such a way. Not I'm talking about operating in a such a way. Let's say, for example, a control was designed in such a way. Let's say I'll give you an example. Again, I'll give you an example. Payment processing controls. Now, under this control, what was the design of the control? Okay. Now, each and every control is designed to mitigate a particular risk. Here, the risk was, let's say, my risk is inaccurate processing of vendor payments plus untimely payments to vendor. Now, why untimely? Untimely means there are credit days given to us. There is a credit period given to us. If you pay before your credit period, okay, there is no harm in that, but it will impact your cash flow. It will impact your working capital cycle. So that's why it is also not a good thing to pay before the credit period. Or yeah, if you have excess cash, then it's a decision making, strategic decision making. But generally, it is seen that a company enjoys its credit period in order to maintain its working capital and cash flow. Let's say, for example, these are the risks that company has seen: inaccurate processing of vendor payment and untimely payment to the vendor. Okay. Now, the control was for the payment processing that a payment proposal will be prepared by executive. This payment proposal will be uploaded on the banking website, authorized signatory will check the arithmetic accuracy and will approve the payment, and subsequently it will be entered into ERP. Okay, this is a control. Now, number one, what is the issue you are looking in this particular control? Where is the issue? A payment proposal will be prepared by executive, will be uploaded on banking website by executive. Authorized signatory will check the arithmetic accuracy and will approve the payment, and then subsequently it will be entered into ERP by executive. Number one, where is an issue? Let's say this is a particular process. Okay. Now you need to tell me where is the issue. Come on, guys. You need to tell me where is an issue. Again, a payment proposal will be prepared by executive, that will be uploaded on banking website by executive. Authorized signatory will be checking the arithmetic accuracy and will approve the payment. Then once the payment is done, subsequently it will be entered into ERP by executive. This is a payment process. Okay, payment to vendor. The risk was inaccurate processing of vendor payments and untimely payments to vendor. This was a risk. Now you tell me where is the issue in this pattern, in this whole control. Okay, good, Namrata. Okay, good, Janvi. Good, Shri Ram. Come on, guys, where is an issue in this particular control? I'm asking you to apply SA 315, understanding the entity, its business process, and its internal control. So you are required to understand what is the internal, which are the internal controls that the entity is having, understand design, and assess whether the risk is being, addressed or not. Okay, I'll tell you. Number one, that here the person who is, preparing the payment proposal, the executive, is uploading on a bank website. There is no check in between that what he has prepared is correct or not. So there is no maker checker concept, a preparer approver. So there is no check or approver, whatever he has prepared is correct or not. Because the person on the bank website is only checking arithmetic accuracy. What about the vendor advances? What about the correct bank accounts? What about the, taking the correct invoices? What about the taking invoices which are only due, which are not, not yet due for payment? Who is checking those invoices? What if I pay the invoice which was not due, which was just recorded yesterday, received yesterday, and it was supposed to be become due after 30 days or 60 days or 40 days? What if about, duplicate payments are there, duplicate line items, invoice being, selected twice for the payment? Okay, so there could be issue like duplicate payment, plus you could say advance not adjusted, you could say untimely, or you can say invoice not due, selected for payment. There could be a lot of issues in this because there is no checker behind them, in front of the maker. There should be a maker that is there, executive, but there is no checker what executive is making. Okay, hence this control has a deficiency in it. This control has a deficiency because it is not stopping the risk of inaccurate processing of vendor payments and untimely payment of untimely payments to the vendor. Okay, there are two deficiencies, means it's not stopping two risks. So there are deficiencies. Now, whether I have identified a misstatement or not is a secondary thing, because my audit is to provide a reasonable assurance. I do not perform a 100% check. So based on my evidence, based on the samples I have seen and checked, it may happen that misstatement should not be part of that. But that doesn't mean the misstatement is not there, or it doesn't mean that misstatement might have not occurred. If I'm not identified, that doesn't mean the misstatement, is not there, because I am performing sample testing. I am, based on my sampling methodology, I am selecting certain samples from the population. Hence, when a significant deficiency is there in the control, it's not necessary that it is, I go and check the actual misstatement. Actual misstatement might be there, might not be there. Or even when a control is having issue with its design, we do not test for operating effectiveness of that particular control because the design itself is issue. I cannot rely upon the result of operating effectiveness of those particular controls. Okay. If you see the SA 315, it talks about when there's an issue with the design itself, I am not required to put reliance on that particular control. I'm not required to test that particular control for the operating effectiveness because it will give me no comfort. In such cases, significant deficiencies is not only dependent upon the actual misstatement, but it also depends upon the likelihood of a misstatement if I have identified issues in the design deficiency. So the correct option here would be B, that significance of a deficiency or combination of deficiencies in internal control depends not only on whether a misstatement has actually occurred, but also on the likelihood that a misstatement could occur. Like this control, there is a likelihood because the control design is a problem and it has nothing to do with the actual. Okay, here I cannot rely upon this control. There is a significant deficiency in the control itself. Okay, therefore, significant deficiencies may exist even though the auditor has not identified misstatement during the audit. That's the correct one. A, which was talking about that it should only be a significant deficiency when the control, when I have identified misstatement, is incorrect. C again is incorrect. Reason because it talks about different disclosures, different assertions, different components of internal control, or different account balances. It could, like, I have a simple problem in my vendor payments. Okay, vendor balances. There are the three controls together are problem. So it's the same account balance, same assertion, or let's say different assertion. Okay, so in that case, it could be a significant deficiency. Okay, so C is wrong. Again, D is also wrong because it's asking us to rely upon the management assessment. That is not correct. So management assessment, where the law is not there is no such thing. C is asking different account balance, different disclosure, different assertion, and that too not to extend to give a rise of significant deficiency. That is also wrong. So the correct option is A. Clear? Any doubt? With respect to significant deficiency, a classic example to understand what could be a significant deficiency. Any doubt, guys? I applied SA 315 to understand the control. I identified that there's a design issue, and I evaluated the observations or the design issue, and then I I concluded, okay, there could be a significant deficiency. Any doubt, guys? Any doubt? Okay. If no further doubts, then let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session. Okay. Let's take a quick 10-minute break. Welcome back to the lecture. Okay, let us continue to the next standard. Uh, there was one more question on the SA 265, which was with respect to I'll just quickly cover that one. So the question was, kindly provide the examples of matters that the auditor may consider in determining whether a deficiency of combination of deficiencies in internal control constitute a significant deficiencies. Means what makes you think that a deficiency is a significant deficiency? So what are these examples? Like these examples can be like likelihood of the deficiency leading to material misstatement, susceptibility to loss or fraud, subjectivity and complexity of determining estimated amounts, financial statement amount exposed, volume of the activity, importance of the controls, okay, in financial reporting process. Maybe, they could be general monitoring controls, controls over prevention, controls over selection and application of significant accounting policies, controls over significant transaction, controls over transaction outside the entity's normal course of business, control over financial period and financial reporting process, non-recurring journal entries. Okay, the cause and frequency of the exceptions, and how that exception is interacting with deficiencies and other deficiencies in the internal control. So these are certain examples where based on which you can say, okay, I could rate a deficiency a significant deficiency or not. Okay. Now, there is one last standard left with respect to SA 218 series, that is SA 299. And I want to cover quickly that one also. Just a minute. Okay. SA 299 talks about basically joint auditing. Okay. Joint auditor's responsibility. SA 299 basically provides guidance with respect to joint audit of a financial statement. Like what will be the responsibility of the auditors when it's a joint audit, or what will be the responsibility of the auditors when it's, when they are allocating the work and everything. So while discussing the questions of the SA 299, I'll also explain you the concept of SA 299. Also, I have a good, you can say, case study sort of for SA 299. Okay. Let us see SA 299 question, and then gradually I'll explain you the concept and the requirements of SA 299. KP and Associates, MNO and Company, PKP and Company were appointed joint auditors of Anand Sanand Limited for financial year 22-23. Before starting the audit engagement teams of all three audit firms got together to discuss the approach for the audit. Mr. Manoj, the audit manager at MNO and Company, suggested to start the audit and gradually decide the allocation and division of work. So they decided, okay, let's start the audit and gradually we'll decide the allocation and division of the work. Mr. Prakash, audit manager at KP and Associate, agreed to that and suggested that they should start by taking one area each from balance sheet, like long-term liabilities, fixed asset and investments respectively. Mr. Kripal, audit manager at PKP and Company, had a different opinion. As per him, the audit team should decide the entire division of work before start of the audit. To that, Mr. Manoj and Mr. Prakash presented their thoughts that the entire division of the work before start of the audit will take much time and create a delay in starting the audit. Okay. Now, I'll read further, but before that, let's see the question number 1. Mr. Kirpal has reached out to you to understand the correct approach with respect to developing a joint audit plan. Kindly guide him by selecting the appropriate option from below. Before going to the options, what is the discussion over here with respect to the audit plan? Mr. Manoj is suggesting that, okay, let's start the audit, gradually decide the allocation and division of work. Mr. Kripal is saying that audit team should decide the allocation entire division of work before start of the audit. Now, Mr. Manoj and Mr. Prakash are saying that entire division of work before start of the audit will take much time, which will create a delay in starting the audit. Now, you tell me who is the correct and which approach is the correct approach in this case. Whether Mr. Kripal is correct or whether Mr. Manoj or Mr. Prakash is correct. Come on, guys. Whether Mr. Kripal is correct or Mr. Manoj or Mr. Prakash are correct. Come on, guys. Who is correct in the current scenario? Who is correct in this scenario? Come on, guys. I'm waiting for your answer. Whether they should decide the entire division of the work at the start of the audit, or they should gradually decide. Gradually deciding will give them the benefit that they can start the audit quickly, but deciding the entire work at the start of the audit will give them the clarity. Downside of the starting the entire deciding the entire work or division of the work will create a delay. However, the downside of starting the audit and gradually deciding will be like they will not be clear what to do next. So what do you think should be the correct approach? Okay, good, Jamie. Good, Tushar. Okay, correct, Jamie. Absolutely correct. Let's see the options. The options are: after commencement of the audit, the joint auditor shall discuss and develop a joint audit plan before finalization of observations. So they should discuss and develop a joint audit plan, but that should be before finalization of observations. In developing the joint audit plan, the joint auditor shall identify the division of audit areas and common audit areas among joint auditors that define the scope of each joint auditor. Second option. So the first option focus on they should decide before finalization of observation. After commencement of the audit, but before finalization of observation. Second option. Development of an audit plan is dynamic and continuous process. Joint auditors can develop the audit plan in issuance of audit report, wherein the joint auditor shall identify the division of audit areas among joint auditors that define the scope of work of each auditor. So here it is saying it's a dynamic and continuous process, and they can develop till the issuance of audit report. Third, prior to the issuance of audit report, the joint auditor shall discuss and develop a joint audit plan. In developing the joint audit plan, the joint auditor shall identify the division of the audit work audit and common areas among the joint auditors that define the scope of work of each auditor. So it talks about prior to the issuance of audit report, they should develop the joint audit plan. Now the fourth option, prior to the commencement of audit, the joint auditors shall discuss and develop the joint audit plan. In developing the joint audit plan, the joint auditors shall identify the division of work of common audit areas and amongst the joint auditors that define the scope of work of each joint auditor. So it talks about prior commencement to the audit. So you have four options. One, after commencement, before finalization of observation. Second, dynamic and continuous process till the issuance of audit report. Third, prior issuance of the audit report. Fourth, prior commencement to the audit. Okay, good Sriram, good Tushar, good Namrata. Come on guys, what is the correct option here? Come on guys, what is the correct option? Okay, correct Sriram, good. I'm still awaiting more answers because it's a very important thing to understand the joint auditor's responsibility. It's very important to understand the joint auditor's responsibility. So you need to understand when they should decide the division of work. Okay, so let me tell you the answer. Now, see, there are two things. Number one, what standards has a requirement? Okay. Number two, why it is the requirement. So standard requires us that before commencing the audit, the division of the work should be done. Before commencing the audit. Okay. Now, why it is so? Why it is so? That is before commencing the audit. Reason because before commencing the audit, if you have done your division of work, you have the clarity who is going to perform what. We have a common areas identified. We have a separate areas identified. Each joint auditor will be able to understand, okay, what is this scope of work. Now that will lead him for appropriate planning of the audit of his areas. Let's say, for example, if you have not started the work, let's say in this question, like, Mr. Manoj and Mr. Prakash was suggesting that okay, each as of now will take long-term liabilities, fixed asset and investment. Now, what if there is any issue in the long-term liability which is also connected with the cash and bank, or if there is any issue in the long-term liability which is connected to the area which is, let's say, for example, your payables, because long-term payables are shown over here. So who will take that area? Who will take that particular thing? Who will look after that? Let's say, for example, fixed asset. Now I know there is a fixed asset, but there is another area which is government grants. Now that is not divided. So if there is any issue with respect to the fixed asset and government grants, then, or let's say for example, there is an investment in foreign exchange difference or something like that. Who will be responsible for looking at that? Or who will be responsible for investment in treasury? There's an issue in investment also impacting treasury. Now who will look for treasury? Who will they communicate? So in that case, it will become very cumbersome, if the scope is not decided at the start of the audit. Hence, it should be at the prior to the commencement of audit, not later. So A, B, and C are not correct. D is correct. Clear? Okay. Let's see the second part of this. Also, Mr. Manoj suggested that when the division of work will be finalized at the later stage of the audit, the team should finalize their nature, timing, and extent of the resources necessary to perform the engagement. Until the division of work is not complete, it is difficult to estimate the resource requirement. Mr. Prakash agreed to the same, but Mr. Kripal was in disagreement. So what do you think with respect to the resource, nature, timing, and extent of the resource? Obviously, on the same line, like we were discussing the commencement of the deciding of the audit plan, we need to decide the nature, timing, and extent of the resources well in advance, so that we can say check whether our audit plan, what we are discussing, according to that we have the nature, timing, and extent of resources available or not. So this should be prior to the start of audit. Then Mr. Manoj suggested that irrespective of the work allocation and division, each joint auditor shall be responsible for work performed by other joint auditors. Now, with respect to that, let's take one question. Mr. Kirpal has reached out to you to understand the correct approach with respect to the work allocation and division, the responsibility of each joint auditor. Kindly guide them by selecting the appropriate option. So, Mr. Manoj was saying that irrespective of the work allocation and division, each joint auditor shall be responsible for work performed by other joint auditors. Now, what are the options we have over here for that? In respect of audit work divided amongst the joint auditor, each joint auditor shall be responsible only for the work allocated to such joint auditor, including proper execution of audit procedures. All the joint auditors shall be jointly and severally responsible for the audit work which is not divided among the joint auditors and is carried out by all joint auditors. Second, in respect of audit work divided among the joint auditor, all joint auditors shall be responsible for work allocated to any joint auditor, including proper execution of the audit procedures. Third, all the joint auditors shall be jointly and severally responsible for the audit work divided amongst the joint auditor, except in the case of examining the financial statement of the entity comply with the requirements of the relevant statutes, where each joint auditor shall be responsible only for the work allocated to such joint auditor, including proper execution. The primary joint auditor shall only be responsible for ensuring that the audit report complies with the requirement of the relevant statutes and the applicable standards on auditing and the other relevant pronouncement issued by the ICAI. So what do you think, which option is correct here with respect to the division of work and the responsibility? Which statement is correct with respect to the division of work and responsibility? Come on, guys. Which option is correct? Come on, guys. Which option is correct with respect to the uh, work allocation and division? What do you think is the correct way with respect to the division of the work and the responsibility for the division of the work? What is the correct option, guys? I'm awaiting for your answers. This will help you to understand the concepts of division of work with respect to the joint auditors. Okay, so correct Jami, correct Namrata, correct Tushar. I just want to understand why not D? Why not D? Correct Sriram. Why not D? Answer is pretty simple to that, but I just want to understand why not D. Why not the primary joint auditor one? Okay. The reason because why not the primary joint auditor one is because there is no concept of primary joint auditor. There is no concept of primary joint auditor. So don't get confused. So we have a concept of parent auditor. We have a concept of component auditor, but we don't have a concept of primary joint auditor. Okay. So the correct option here will be one. Okay. A, that is in respect of work divided amongst the joint auditor. Each joint auditor shall be responsible for the work allocated to such joint auditor, and all other joint auditors shall be jointly and severally responsible for the work which is not divided. B is opposite to that, and hence it's incorrect. C. Why C is incorrect? Can anyone tell me why C is not correct? So if I talk about this thing, that except in case of examining the financial statement of entity complying with the requirements of relevant statutes, where each joint auditor shall be responsible only for the work allocated to such joint auditor, including proper execution. What is wrong in that? What is the wrong in point number C? I have highlighted. What is wrong in that? If you are saying that C is incorrect, then what is wrong in the portion that I have highlighted? It's the same only. Then we are talking about division of work, and whatever joint auditor has been allocated an area, he is responsible for that only. C talks about that. Correct, Janvi? Correct, Sriram? Correct, Namrata? Absolutely correct. So, in case where there is a financial statement, examining the financial statement of the entity, and in case where there's a requirement to look into the whether these financial statements comply with the requirements of the relevant statutes, all the joint auditors are responsible jointly and severally. It's not the case that one of the joint auditors is responsible, hence C is also incorrect and D is also incorrect. So A will be the correct option. Let's see the next one. Then subsequently, Mr. Manoj suggested that all the audit teams will review the work performed by other audit teams. Okay. Once the full review of work is complete, then the audit teams will issue their separate audit reports. Now, again, as usual, Mr. Kripal has in disagreement, and he wants to understand with respect to the review or to the with respect to the review of the work performed by other joint auditors. What is the correct approach? And our options are: each joint auditor is entitled to assume that the other joint auditors have carried out their part of the work and work has been actually performed in accordance with the standard issued by the ICAI. It is not necessary for a joint auditor to review the work performed by other joint auditors or to perform any test in order to ascertain whether the work actually has been performed. Option number B: each joint auditor shall be responsible for the work performed by other joint auditors. Hence, all joint auditors shall review the work performed by other joint auditors in order to ascertain whether the work has actually been performed in such manner as required by the standards. Third, primary joint auditors shall be responsible for work performed by other joint auditors. Hence, primary joint auditors shall review the work performed by other joint auditors in order to ascertain whether the work has actually been performed in such manner which is required by the standards. Or a joint auditor is not bound by the views of other joint auditors, and hence all joint auditors shall appoint a common engagement quality control reviewer to review all their works. So, what is the correct option over here with respect to the review of the work? So, what is the correct option with respect to the review of work that is being performed? So, what is the correct option with respect to the work that is being performed and review of the work that is being performed? Correct, Namrata. Correct, Janvi. Correct, Tushar. Absolutely correct, Namrata. Correct, Sriram. Okay. So there is no need to review the work performed by other joint auditors. Okay. There is no need to review the work performed by other joint auditors. Okay. Reason because they are also a chartered accountant, and we as a joint auditor have to rely upon the work performed by other joint auditors. Okay. We have to rely upon the work performed by other joint auditors, so that if we go behind each joint auditor, okay, what work you have performed, let us review and everything, it is not a appropriate way to complete the audit. And being a joint auditor, they are also auditor, they are also required to comply with these standards, and they are also uh, chartered accountant member in practice, so hence we have to put reliance on them. As a result, each joint auditor is entitled to assume that the other joint auditors have carried out their part of their audit work, and we can rely on them. Okay, we can rely on them. It is not necessary for a joint auditor to review the work performed by other auditors, except for certain areas. But for majority of the area where there is a division of the work, we are not required to review the work performed by other joint auditors. Okay. Now, in that case, the correct option will be option A, not B, or C or D. So option A is correct. I hope I'm clear. Any doubt? Any doubt? Now here in this question only, I just want to expand this question to one more phase. Okay. So we discuss about 3 joint auditors in this scenario: Mr. Manoj, Mr. Kripal, and Mr. Prakash. Okay. Now let's say while auditing, Mr. Manoj identified certain issues. Okay. Mr. Manoj identified issues / observations in bank account reconciliation. Like there were checks issued but not yet cleared, check issued but not yet cleared, aged more than 365 days. Okay. Now, Mr. Manoj did not communicate this to Mr. Kripal, who was looking after accounts payable. Okay. And Mr. Kripal issued unmodified opinion on accounts payable, because he was not aware of this issue, that there are checks which are issued to accounts payable, but they are aged more than 365 days. Now, in this case, let's say, for example, later on, this matter was identified Okay, this matter was identified. Those charged with governance in their review and they want to take action against, let's say, Mr. Kripal. Okay. Now you tell me who is responsible for this thing. Whether Mr. Kripal is liable for not performing the audit appropriately, whether Mr. Kripal is liable for not performing the audit appropriately. Can I say that Mr. Kripal was grossly negligent while discharging his duties and is liable for professional misconduct? So can I say Mr. Kripal was liable for professional misconduct, which is a clause of professional misconduct for negligence of for negligence, gross negligence? Which is a clause for gross negligence under professional misconduct. Come on, guys. See, this is how can a question be related to professional misconduct same time as the joint audit. Come on, I'm waiting for the answer. Okay, Namrata, good. Okay, Shri Ram, good. Good, Janvi. Good, Tushar. Okay. So, okay, good, Tushar. Okay, now, number one, who will be held grossly responsible for the gross negligence? And which clause it is under the professional ethics? So, you have given your answers. Now, which clause? I want schedule, part, and clause. All the three. Schedule, part, and clause, all three. Come on, guys. Is there any? Is there will be any other clause which will be applicable from the professional ethics? Correct, Sriram. Is there any other clause that also will be applicable? Okay, I'll tell you. See, there are two things. Number one, let's talk about SA 299. So SA 299 says that the each joint auditor is entitled to assume that the other joint auditors have brought to their attention any departure from applicable financial reporting framework or any significant observation that they are relevant to their responsibilities noticed in the course of audit. So it's what the duty of Mr. Manoj to bring to the attention of Mr. Kripal. Okay, because Mr. Manoj identified this. So yes, Mr. Manoj should have brought this. Mr. Kripal is not liable because it was not part of his area, and that should have been brought to the notice of Mr. Manoj, brought to the notice of Mr. Kripal by Mr. Manoj. So Mr. Manoj is liable. Okay, that is there. That's the first part. Now liable for professional misconduct under, as I told you, one clause I just provided you, which was clause 7 for the I provide you one clause, clause 7, that is when a chartered accountant in practice does not exercise due diligence or is grossly negligent in conduct of his professional duties. Okay. Plus you can say clause 6 of part 1 of second schedule, fails to report a material misstatement known to him or appearing in the FS where he was concerned in preparing in his professional capacity. So where he fails to report a material misstatement. This was a material misstatement. These checks he was supposed to report to them, but he did not. So under clause 6 and clause 7, he can be held guilty of professional misconduct. Not Mr. Kripal, because as per SA 299, Mr. Manoj was supposed to inform to him. So SA 299 plus clause 7, clause 6 will make Mr. Manoj responsible. Yes, Shri Ram, they could be. Any doubt, guys? Any doubt? I hope you are clear now. Any doubt with respect to this? Okay. They will be, I'm not sure why we're saying they will be asked in exam. It can be asked. Okay. Let's move to essay 300 series. Essay 315, very important essay. Okay. Now, essay 315 talks about very important essay, very important to the audit also. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. With the help of questions, I will be explaining you the essay. And with the help of questions, we will be discussing and deep diving in this particular essay. Okay, let us see. Mr. Anand Pal. Mr. Anand Pal, audit manager on the statutory audit of Mountain Waters and Beverages Limited, explained to his team that the auditor is required to perform risk assessment procedures to provide a basis for identification and assessment of risk of material misstatement at the financial statement and assertion level. However, such a procedure will only include inquiries of management and not of other individuals or functions within the organization. Inquiring with the others within the organization will alert them and will reduce the chance of detecting fraud within the organization. Mr. Mukul, the engagement partner, has a different opinion. Kindly guide the audit manager and engagement partner with respect to the requirement of inquiring under the risk assessment procedures. So, Mr. Anand Pal, who is the audit manager, is saying that we should not include inquiries of others, individuals, or functions within the organization because this will alert them and reduce the chance of detecting the fraud within the organization. Mr. Mukul, who is the engagement partner, is having a different opinion. Okay, so there are a few questions with respect to answering the question that we discussed previously. Okay, uh, so the question is for the descriptive questions on gross negligence or due to professional misconduct, whether we can write answer without giving reference to clause, part, or schedule. See, you can write the answer, but it is expected from you during in the answer that you mention the clause number, part, and schedule. If you will not write, yes, there will be impact on marks. Now, another question is how to remember all such clauses of the essays. Okay. To remember the clauses, you can refer to my previous lecture. I have, provide a summary sort of all the clauses and, some shortcuts. You can see the lectures. Okay, in there I have discussed how to remember each clause, some short verbal terms and something like that. You can prepare your own and it will be very helpful. So if you see my previous lectures on professional ethics, I have explained how you can remember them. Okay, now coming to this question quickly. So Mr. Anand Pal is saying, please do not make inquiries of others. This will alert them and will reduce the chances of detecting the fraud within the organization. Mr. Mipul, the engagement partner, is having different opinion. What do you suggest? Who is correct, Mr. Anand Pal or Mr. Mukul? Should we make inquiries of others during the risk assessment procedure? Should we make inquiries of others during risk assessment procedure, or whether making inquiries with the others within the organization will alert them? Come on, quickly. Okay, Janvi. Okay. Let us see the options here. Option number one, inquiries of management of appropriate individuals within the internal audit function, if any exists, and of others within the entity who is in auditor judgment may have information, is likely to assist in identifying risk of material misstatement due to fraud. Inquiring with the others within the organization will alert them and will reduce the chances of detecting fraud within the organization. And hence, auditor should not uh, be within the entity and other employees with different level of authorities. Inquiries directed towards in-house legal counsel may provide information about such matters as litigation, compliance with laws and regulation, and knowledge of fraud. However, inquiries of employees, those charged with governance and towards marketing or sales personnel should not be conducted. If, based on response to the auditor's inquiries, it appears that there are no findings, then only the inquiries of others should be conducted. So what do you think is the correct option? Option number one says you should conduct. Option number two says you should not conduct. Okay. Option number three says it should be conducted only for the legal counsel, not for the marketing, sales personnel, employees, and those charged with governance. Option number four says if there is no findings, then only conduct inquiries. So what do you think is the correct option? Okay, good, Janvi. Come on, guys, what do you think is the correct option? Whether we should conduct all, we should not conduct for the all, we should only cover legal, but we should not conduct marketing and sales or other employees, or we should conduct only if there are no findings in our preliminary inquiry. When it should be conducted? Okay, good, Tushar. Come on, guys, I am awaiting more answers. This will enhance your knowledge on the risk assessment procedures. Trust me. Good, Shriram. Good, Tushar. Good, Jani. Okay. Okay. So, should we conduct the inquiries? Answer is yes, we should conduct the inquiries. And why we should conduct the inquiries is my next question. Okay, is the next question that I'm going to cover, and that will give you clarity on this particular question. So let's go to the next question. So Mr. Anandpal wants to understand what can be achieved through inquiries of others within the entity and other employees with different level of authorities. Kindly guide Mr. Anandpal. Okay. Now this question will give you the answer why we should conduct inquiries for others and why the option A is correct, not B, C, and D. Okay. Auditor may also obtain information or a different perspective in identifying the risk of material misstatement through inquiries of other within the entity and other employees with different level of authority. For example, inquiries directed towards those charged with governance may help the auditor to understand the environment in which the financial statements are prepared. Inquiries of the employees involved in initiating, processing, and recording complex, unusual transactions may help the auditor to evaluate the appropriateness of the selection and application of certain accounting policies. Inquiries directed toward in-house legal counsel may provide information about such matters as litigation, compliance with laws and regulations, knowledge of fraud, suspected fraud, okay, warranties, post-sales obligation, arrangements, okay, such as joint ventures with business partners and meaning of contract terms. Inquiries directed towards marketing and sales personnel may provide information about changes in entities' marketing strategies, sales trend, contractual arrangement with customers. And if entity has an internal audit function, inquiries of appropriate individual with the function may provide information that is useful to the auditor in obtaining, understanding the entity, its environment, and identifying the and assessing the risk of material misstatement at the financial statement and assertion level. Internal audit function is likely to have obtained insight about the entity's operation, because usually on what happens is internal audit performs the risk assessment procedure in advance for their internal audit. Okay, so internal audit will also perform same procedures for their so that they can conduct their internal audit, and hence when you inquire with the internal audit, you get the understanding that they have obtained with respect to the business risk or findings based on their work or any control deficiencies they have identified or risks they have identified. That will be valuable input for us. Okay. Hence, it is therefore necessary to perform the inquiries of internal audit function. So, in this way, inquiries with the others will give you a valuable insight, and that's why option A in our previous question is correct, not B, C, and D. Clear? Any doubt? Any doubt with respect to this? Okay. Now let us take one more question which is in continuation to that only. Okay. Mr. Mukund, an audit executive, not the Mukul who was the audit partner, but this is Mukund, performed a ratio analysis to compare the trend analysis in sales. Okay. He performed the volume to sales analysis and to understand the price trend. He also performed volume to sales analysis to understand the price trend. Mr. Anand Pal, the audit manager, was of the opinion that the analytical procedures are only required to be performed during substantive testing phase. Ratio analysis and trend analysis during risk assessment phase are irrelevant, as the base data is still unaudited and the team cannot draw any comfort from the analysis drawn from unaudited data. Mr. Mukund, being not fully satisfied from the response of audit manager, has reached out to you to further understanding on performing analytical procedure during risk assessment phase. So the audit manager is saying that risk assessment phase are irrelevant. Ratio analysis during and trend analysis during risk assessment phase is irrelevant because the data is still unaudited and no comfort can be drawn from risk assessment performed from unaudited data. What are your opinions on that? What do you think? Is the audit manager correct or not? Is the audit manager correct or not? Or should we perform or not perform the analytical procedures during risk assessment procedures? Come on, guys. Should we perform the analytical procedures during risk assessment procedures or not? Come on, guys. I'm still waiting for the answers. Can we perform risk assessment procedures? Oh, can we perform analytical procedures during risk assessment, or it is not worth to perform analytical procedures during risk assessment procedures? I want with reason. With reason for your answer, that why no, if it is no. If it is yes, then why yes? How many of you have went through my previous lectures or the lectures which are available on the BOS portal? See, unless and until you do not go through those lectures, you do not study, you do not read the study material, there is no alternative for answering the question. You can get your topic, your understanding clear only when you read the study material, you watch the lectures. Also, I would suggest only watching the lectures is not sufficient, because yes, we cover in the lecture in detail, but still your own reading is also required. So please read the study material. It's sufficient that is provided by the institute. It's sufficient. There is no need for referring any other study material. Trust me, the study material provided by the institute, it's sufficient. Please go through the lectures. You have RTP, suggested answers, MTPs, MCQ booklets, a lot of material available to practice, and there is no alternative. Mark my words, there is no alternative for the reading the study material. You cannot gather the understanding unless and until you read yourself. I request, please read, please watch lectures, because then only you will be able to answer the questions. Okay, good, Shri Ram. Okay, good, Tushar. But I want reasons also why. Okay, let us see the answer. As per SA 315, identifying assessing the risk of material misstatement through understanding an entity, its environment. Okay. The auditor shall perform risk assessment procedure to provide a basis for identification and assessment of risk of material misstatement at the financial statement and assertion level. The risk assessment procedure shall include analytical procedures, and I'll tell you why. Analytical procedures performed as a risk assessment procedures may identify aspects of entity of which the auditor was unaware and may assist in assessing the risk of material misstatement in order to provide a basis for designing and implementing the response to the assessed risk. Analytical procedure performed as a risk assessment procedure may include both financial and non-financial information. For example, relationship between sales and square footage of selling space or volume of goods. Analytical procedures may help in identifying the existence of unusual transactions or events or amounts, ratios, and trends that might indicate the matters have audit implication. Unusual and unexpected relationships that are identified may assist the auditor in identifying the risk of material misstatement. Specifically, the risk of material misstatement due to fraud. However, when such analytical procedure use data aggregated at the high level, okay, the result of those analytical procedures only provide a broad initial indication. So, when you use the data at high level, let's say sales volume for the year or sales volume for whole sales revenue amount for the whole year at a high level for all the sales and all the products, okay, that will provide you only broad initial indication. If you use the data at the detailed level, it will provide you detailed analysis. Okay. So high level data will provide you broad indication about whether a material misstatement exists. Accordingly, in such cases, consideration and information that have been gathered when identifying the risk of material misstatement together with the results of analytical procedure will assist the auditor in understanding and evaluating results of analytical procedure. So analytical procedures result, other risk assessment procedure result together will give you a good information to perform the detailed risk assessment and will help you to identify the risk of material misstatement due to fraud or error. So you can perform analytical procedure, but you need to perform other procedures also so that you can take the results from both and perform a risk assessment procedure in detail. So it's not like that you should not perform the analytical procedures. You should perform the analytical procedures during the risk assessment phase. Hence, Mr. Mukul can perform analytical procedure during the risk assessment process. And when such analytical process uses the data aggregated at the high level, other information gathered during the risk assessment process shall be used to corroborate the conclusion of analytical procedure. Clear? (315) does not talk about substantive procedures. 315 talks about understanding the entity. 315 talks about the risk assessment procedures. Okay. And why we should use the risk assessment procedure is this. It's not because the 315 is asking. You need to understand why 315 asks you to perform analytical procedures. As I told you, we do not perform a procedure because it's asked by the standard. Standard asked to perform because there is a logic behind it. You need to understand that logic. I can write in the answer that okay, because SA 315 requires to perform risk analytical procedures, requires to perform an analytical procedure during risk assessment phase, and hence the auditor should perform. But why is very important. If you want to understand thoroughly particular standard, if you want to learn how to answer, you need to understand why it is asked in a standard to do this or do that. There is a logic behind everything. You could see, okay, one line, okay, standard requires you to perform analytical procedures. Done, that's it. You can write in exam, okay, SA 315 requires us to perform analytical procedures. That's why the Mr. Mukund should perform. But the logic behind will give you more clarity, will make the answer more good, okay, and will help you to understand why the standard requires. So next time you are not required to mug up, okay, these are the 4 steps that we should perform in the risk assessment procedure because standard requires us. You will not require to do that if you understand the logic. Any doubt? Any doubt with respect to this? Any doubt with respect to this question or any of the question of SA 315? Okay. If no further doubts, in the next lecture, I will be covering the rest of the SA 300 series. Okay. 320, 330, 450. And there are 1 or 2 questions from 315. We will be covering that. So we'll be closing the SA 300 series in the next lecture. And then we'll start for the SA 500 series. But before next lecture, please go through the lectures already recorded. Please go through the study material. Okay. Come up here with your doubts. And then only you will be able to understand the question that we are solving over here. Okay. If no further doubts, then I propose to close the session and lecture over here. Thank you guys. Thank you for participating. And please watch the lectures and read the study material. Thank you. Thank you, sir.